Hello, you're watching Proactive. I'm joined in studio today by Anthony Ginsberg. He's the CEO of GinsGlobal Index Fund.
We're obviously running a tech megatrend product that's actually equally weighted, Stephen. So we do actually own AI. We actually think it's a buying opportunity right now. We think that AI is spreading its wings, and if you look at where AI is going to infiltrate more, increasingly it is into places like cybersecurity, cloud, robotics, even things like biotech. So over the longer term, and we're looking 2-3 years out, these AI players, but there will certainly be winners and losers too. So the average PE ratio for our tech megatrend fund is a lowly 21 times earnings, whereas Nasdaq, which is significantly overweight in AI and in the Mag 7, that's trading at around 34 times earnings. So if you actually extrapolate out the Mag 7, you actually get a tech valuation that's pretty attractive at 21 times earnings. The problem has been that you've got this very narrowness in the market with these Mag 7. Last year, the best performing Mag 7 actually was only number 75 out of the 500 S&P top performers. So I think it's had a very, very strong run. We see the market broadening out and actually changing. And for us, the most exciting opportunities are actually areas such as that are undervalued. Things like cybersecurity, cloud, social media, they really haven't run as hard. So those PE ratios are in the, as I say, the low 20s, and that actually pulls. And I don't see tech as just an AI play. I really see it more of also a global play. One last thing I'll say is what's brought our PE ratios down significantly is the equal weighted approach where we have these sub-themes evenly distributed, and every 6 months they rebalance. So last year, for example, blockchain, which was out of favor in previous years, actually was our best performer. And now this year, blockchain may not be doing so well, but defense tech has actually been a new area that we've seen significant pickup. So that's been actually our best holding sub-theme this year is defense tech. So interestingly enough, quantum computing is still early days. So there are only 5 listings. We actually have 15 listings or holdings per each of our sub-themes. So we like to tell folks we've got 10 sub-themes in the Megatrend ETF basket. But at the moment, 15 of them are for each of the top ones. So obviously AI, robotics, social media, they all have 15, but quantum only has 5, mind you. But quantum has become an importantly strategic area for the Pentagon, for the US government. So most of those holdings, the 5 we do have, are pure play quantum. They all had a very, very good run last year. It's come off a little bit. There's been profit taking in the last month or two. And what's actually buffeted us for the moment has actually been defense tech. So since December, defense tech is up over 25%. It's been quite a strong gain. Things like drone technology and other areas, I think the Pentagon, the CIA, others in the US government, State Department areas have recognized that they've got to actually bring in businesses to help, basically be a ballast for the defense industry and no longer just rely on the 4 or 5 big prime contractors. We're not buying any ether or any blockchain, I should say, cryptography at all. It's all the back office ledgers, digital administration side of it. So it's actually held up reasonably well. Part of the reason it's held up is the fact that we're equally weighting 15 holdings. What we've actually found being a ballast and really helping reduce the volatility. The fact is that we've got Chinese holdings of around 12%. Japan's about 7.5%, 8%. Asia as a total is now almost a quarter of our fund. And that has certainly helped us, Stephen, in the last year and a half. We were actually up almost 20% last year, partly because of the emerging market nature. I would say one thing, the robotics leaders are not American. You've got areas such as robotics being leaders in South Korea, Japanese players, and then we thought it was rather short-sighted to ignore the whole Chinese ecosystem. So when you look at Baidu and you look at Alibaba, Alipay, BYD, electric vehicles, many of these guys are leaders in their fields, and it was short-sighted to exclude them. So we've always included China as part of our global mix. So the tailwinds of lower interest rates helps tech megatrend stocks. It helps growth stocks. And the truth is, a lot of the smaller mid-cap tech stocks are ripe for the picking in terms of being acquisition targets, and a lot of the stuff was blocked under the previous administration. So we remain fairly optimistic. I'll say one last thing is that the weaker US dollar, interestingly enough, is not a negative. It actually is a positive for a number of the large export earners. It helps boost the earnings per share for a lot of the larger American multinationals. So all in all, we're happy with the global exposure and not too dissatisfied with a slightly weaker dollar.